Good morning. Welcome to Forex in Four. Today is Monday, November 28th, 2011. I hope everybody had a nice holiday. Friday morning was a little bit difficult here for us because it's all stuffed with turkey and whatnot. But now it looks like we're getting back to the business of the markets. And as you can see here, we're looking at the euro, which is climbing higher. I'll get to some of the other stuff going on here. Today's Cyber Monday. We'll talk about that in a second. But if you look at the euro right here, I'm just pulled the 5-minute chart up because I want to show you this big move that happened when we opened back up for trading on Sunday. All right, you can see, boom, euro got that huge pop there and traded higher. Now it's pulling back just a little bit. But there was a rumor being floated around that the IMF was prepared to make a loan to Italy, and that was going to help them with their, their debt crisis problems. So it's sort of like the IMF bazooka, although they're denying that currently at this point in time. But what that did is that it was enough to give the markets a bit of a boost, saying that, okay, we think that the Eurozone and the IMF and the monetary people out there, the cabal, if you will, that they're going to really try and step in and take care of this, because right now, or prior to, it didn't look like the euro had much of a chance of surviving at that point. So I just want to pull it back a little bit. When we look at the 30-minute chart, you'll see on Thursday we called it, or excuse me, on Wednesday, called a 3250 bottom here for euro. You can check that out on chart of the day. But you can see we pulled up here, and also we identified 3430 as an area of resistance. So you can see we pulled up just shy of 134 this morning, which is the R2 daily pivot resistance, and we're pulling back a little bit here. Now the news on the wires this morning, not a ton of news for the eurozone. All right, we have the what happened? There was a Eurozone Italian business confidence that came in a little bit better than expected, and that's really been what we've been seeing today. So today is not a lot of news, but there will be some headline risk coming out this week. In the Eurozone, tomorrow they start a 2-day European finance ministers meeting, and obviously this debt crisis is going to be front and center on everyone's minds. So they're talking about different things they can do. They're talking now about ratifying the treaties of the Eurozone to have countries that can impose better budgetary concerns and restrictions, so that they can say, all right, well, listen, you can't have debt that exceeds X amount. But we know that yields have been rising in the eurozone, and that's been the problem plaguing the markets for a little while now. So that's eurozone. I'm just going to flip it over here to show you the pound. All right, you can see risk assets in general started to climb as a result of this European news, even though technically it's been denied by the IMF. But in the UK, they had home prices came in a little bit lower than expected. So it looks like perhaps prices are falling back down, as the Bank of England has been hoping for. And if they do fall in line, then that could give them further ammo to go ahead and be a little bit more accommodating with monetary policy. So this morning is, like I said, not a ton of news here. We're going to get U.S. New home sales are going to come out 9 a.m. Eastern time, and that may be able to give us a lift here. Just want to show you dollar yen. You can see dollar yen. Dollar's starting to climb a little bit here. We're getting up towards that 78 level, but I'm going to back it out just a little bit here. And you can see that we've just sort of been in this like little bit of a saucer pattern there. So if we get back up to 78, this thing's going to putter around there. That's going to keep everybody in Japan happy for the time being. Although they would obviously like to see their currency weaken a lot further versus USD. Just show you the commodity currencies. Let's start with New Zealand. Okay, New Zealand got a big bounce here, obviously on the risk move that we were talking about, but also on the fact that they had their business confidence and activity outlook figures came in much better than expected. So that was a good sign there for New Zealand. All right, Aussie. We're going to see Aussie is same sort of move, moving back higher, getting back towards that parity level with USD. Just want to show you oil. This is interesting. Oil prices, boom. Nice spike up here right off this 95 bounce. Okay, and you can see that we're pulling back just a little bit, but we got this move higher from about, I guess we were in the 98 levels to start the session. We'll pull it back to the half-an-hour chart here so we can see. Let's look at that one. So you can see this is the move open on oil. So, we've got inflation expectations, which, I think they're going to start to pick up. Everyone says inflation keeps, expectations are lower, lower, lower. But, I don't know. With all this monetary easing, you've got banks out now reporting that they believe that the Fed's going to come out and do QE3 to the tune of about $800 billion. That's been the consensus average. And that's going to be an interesting scenario to see what happens with inflation. Now, we know that Friday here in the U.S. is Black Friday, which was retail sales extravaganza. Anybody who's watched the news can see that. God, I mean, people pepper spraying each other to buy stuff. Rather crazy activity, if you ask me. But sales were up some 26%, so that was, by all accounts, that was a great number. And today is Cyber Monday. They're hoping for some follow-through as well with online sales. So, if retail sales look good heading into the holiday season, then there could be a sign that the consumer is alive and at least willing to spend. So we're going to have to see. But we've got news coming out later this week. This is a jobs week here, so on Friday we're going to get the non-farm payrolls report here in the U.S. Also in Canada we're going to get their employment changes, but non-farm payrolls is going to be the big one. All right, I think right now we're expecting, let me see here, a change of we're expected to add about 120,000 jobs. So that's going to be a big one to see what's happening. And heading into this holiday time, sometimes you see that pick up in employment while people hire part-time to help with sales, things like that. So I don't know if we'll see that bump yet, or perhaps we'll get it in January. But it looks like we're expecting a little bit more than last time. All right, last time's the expectation came in around 80,000 thereabouts. So we're looking at that. Just some other news. Let's see. There's going to be ISM manufacturing on Thursday. China manufacturing. Keep an eye on that one for the Australian and Kiwi and risk assets. All right, they're very closely linked to China PMI. All right, Wednesday we're going to get the Fed Beige Book. All right, and we're going to get GDP figures in Canada. That's going to be important as well as German unemployment. And then let's see, on Tuesday, Tuesday's about confidence. We're going to get U.S. consumer confidence. We're going to get European consumer confidence as well as some German CPI data. So kind of a mixed bag this week for data. I think it's really going to be more about what happens with Euro debt crisis. If anything comes out of this EU finance ministers meeting, which starts on Tuesday, and if the markets look to stabilize, and if bond yields can reverse the current trend of rising in the debt strapped countries in Europe. So that's really what we're keeping an eye on. But at the bare minimum, we could call these short covering rallies on rumors. I mean, the markets want to go higher. I mean, there's no surprise there. It's just a question of, will the news be enough to provide confidence for market participants to step in and buy risky assets. So that's what I'm looking at for today, gang. Good trading to all.